Good afternoon, everybody. Good afternoon. Sorry, it's been a while. Been dying in bed, but I'm back. I'm back, guys. I'm back. What a week I have missed. Wow. Treasury yields gaining. How many percent? It's just absolutely phenomenal move you never normally see in the bond market. Right, being some sort of disaster. 30% move, absolutely phenomenal. We see the stock market come off. We see Bitcoin come off. We see dollar very strong. Risk assets of dying. But the question is, guys, the question of all questions, is it just a pullback or a reversal? What I can't stop hearing, left, right, center. And the question is, guys, I don't know. I don't know. All we're going to try to do is paint a picture here to try to predict where we're going. Because this week, last week and this week are two very critical weeks. Very, very, very critical weeks. So, and I think all eyes are on the bond market. I think this is going to be the main driver. 100%. I mean, it's always the main driver, but right now, I think this is a life or death situation. We've actually achieved the 1.5. We spoke about this months ago, but we've actually achieved this 1.5. And this level is the crossroads now. You must remember as well, the main driver for yields, guys, this is the bond yield, yeah? So when money comes out of the debt market, the yields go up. When money goes into the debt market, the yields go down. So money is coming out of this debt market, which shows a load of things, but the main things it shows is growth is coming back, and they've got high expectation of inflation. that was a tongue twister. But there's one thing we need to think of right now, guys. There's money coming out of the bond market. Clearly, where is it going? Is it going into riskier assets? Is it going into safe haven assets? Because people now is a crunch time level. I think personally, we're not ready for the crash yet. So I think I can anticipate a crash coming, and this crash is going to affect everything: Bitcoin, stock market, and the debt market, everything. Because the debt market, Bitcoin, and the stock market are all correlated, guys. Have to do a video on this another time because we've got a lot to talk about today, so probably won't have time because it's just a market breakdown. But there is a lot to talk about with their three correlation, guys. But so money's coming out of the debt market and it's going somewhere. I think for now, it's still going to be in the risky assets like the stock market, Bitcoin, all those kind of assets. But I think we're in the process of changing, guys. I think we're on our last legs of risk. Reason being is the crunch time here. Oh, sorry. Another thing I want to add as well is bond yields going up as well isn't necessarily as good as you think. In an ideal world, the yields going up means growth is back, blah blah blah. Growth is back, stock market back up. I mean, basically, we're ready to reinflate. Now, the problem is we're seeing a bit of both. Where we're seeing growth and inflation, it's a bit of a tug of war. And stock market is going up because of inflation. Let's get that right. It's not growth. Growth is it's inflation. Now, don't forget the debt market works very highly correlated with the interest rates. So this going up will give Powell more of a reason to up interest rates. Now, upping interest rates in a zero rate division with heavily inflated assets is very negative. Very negative. Let's get that right. So the yields going up is not necessarily good for the stock market or necessarily good for risk. It can actually be counterproductive here, guys. This is why we've got a lot to think about. This is not an easy crossroad work that's coming. There are so many factors to think of, so many factors. I'm trying to put them all out here so we can try paint a picture between all of us. So we're all on the same page here and we all know what's going on. So coming to a halt could be a good thing for the debt market. Don't get me wrong. I know people people are thinking, sorry, the yields going up could be good for the stock market. I know people are thinking, oh, well, we see the big move up last week, and then we saw the big move down. We saw the big rejection last week. Yes, we did. Sorry, let's get the week out. Yes, we did. But this is because, guys, when the bond market is usually your safe haven. So when it starts moving with aggressiveness, even to any sort of frame, to any risk asset, it will start to wobble because it's worrying, guys. It's worrying. It's moving at a high pace. This is supposed to be a controlled market. It's moving at a high pace. This sends investors very worrying. This was because, guys, the bond market, as I've said multiple times, is the most important driver to all the markets. The bond market traders are very involved in the market. They know what's going on. They understand inflation, understand growth, understand risk. Bond market traders read any textbook economical book, ask any mentor, ask anybody who's been in the game for a decent amount of time, not these Instagram traders, not these kid traders. I'm talking about real men who've been in the game for years, been in hedge funds, been involved with central banks here. Now, guys, they will all tell you the bond market traders are the real traders. This is where the real economy is going, guys. So we need to keep our eye on this debt market here, guys. We need to. Whether you trade Bitcoin, whatever you trade, you want to know what's going on, guys. Even because I've got a lot of people in this space who just trade the cryptos and the Bitcoins. Yeah, it's good. Obviously, it's all good because you want to know what's going on. You want to know what's going on so you can predict your move. And this will tell us everything. I'm a bit passionate about this, but it's such an important market. I'm going to get back into the market breakdown. I'm going to do a video in itself about the bond yields because it's so important. But let's get into it, guys. Let's get into it. Let's start with Bitcoin. We must. BTC. That rejection. Let's just get the naked price up. That rejection on the monthly. Let's ignore this last candle. That monthly rejection. Ooh. Sorry, wrong tool, guys. All right, so we are pretty much bang on 50% retracement on the month here. That doesn't mean too much. Doesn't mean too much. Happened on the previous month as well. It does not mean too much. Does not mean too much, but let's put it into perspective here. Similar, a little bit deeper here before the crash. We're entering a bit of a sticky territorial stage now. Now the question of questions is this just in the market here to scare investors now because you see the big wick of death is going to make a big reversal, or is this just a continuation? Because don't forget, guys, it doesn't just mean a reversal. This means a continuation. Of course it can. It does not mean a reversal. So a lot of people get mixed up. They see the big wick of death and they think, oh, it's a reversal. Not necessarily. And the problem is we're at all-time highs. We don't know how significant this level is. This level is because we're at all-time highs. Same when it happened there, we don't know. We don't know. Whereas the price come back down here, you know this is a significant level. So rejection of here will be a lot more in depth and a lot more meaningful. Whereas right now, guys. So I was making sure I was recording now. I was thinking, oh my God, don't get me started if I'm recording this. But so right now, we're going to look closely. The monthly is point to the picture here. It's point to the picture. But it's not enough. Let's get into the weekly. We come back nicely. Now, for me personally, I don't know why that's there. All right. As you can see, the wedge pattern, the triangle patterns work phenomenally for Bitcoin. phenomenally. But I think personally, the make or break is 50. I think if we break above the 50, because 50 is such a key psychological level. And I feel like price action going into this look like I feel like when I see price action like this, which is the overextension, which is the point where everyone's selling, then the overextension, then the back down, this is a significant area. This is significant. Very, very, very significant. We're at the point there we had all the retail sellers in the sell here, prices looking good. It's a compressing triangle. We're at the 50 level, which is a very important level. Then we saw the big overshoot, then instantly back down. Instantly. To me, this is almost a fake move. Almost. It's almost fake. I want to see price gets above and close here on the daily for this level to mean anything. Because if we bounce up here and start dropping below here, guys, that level's fake. Then that tells me reversal. And that tells me Bitcoin and risk. Let's get it right. As I said to you, Bitcoin, stocks, and the debt market, i.e. the treasury yields, which I just showed you, they're all correlated. And don't forget the S&P is very correlated with all USD. So we are all correlated. All the risk is correlated. All the risk, inflation hedges, they're all correlated. Every single one of them, guys. So this is substantial for everything. This is the make or break for everything, guys. So this is how I'm seeing it. A break above, bullish. We're flying. We're forgetting this little wobble we saw last week. Everything's forgotten about. We're hunky dory. But a break below here. Ooh, I think we're in no man's land. And don't forget, guys, this is a very similar cross zone to what we've seen on the yields as well. And just the price action I see here, that fake move, I've seen this time and time in the FX when you get the big spikes. It looks fake, but don't forget, I'm basing this on the monthly, guys. We haven't seen the monthly close yet, so let's not jump ahead. And if we look on the week, guys, it just looks like a pullback. So I wouldn't jump too far into this. This is what I'm looking at. This is what I can see, and this is all I'm going to talk about with Bitcoin here. That is the crossroads of death. Crossroads of death. Now, whilst we're on this, let's look at Ethereum, which is the second biggest. Ether. Now, Ethereum's very interesting. Oh, what's going on, sorry? Ethereum looks very interesting. Look at this monthly. We got this crazy price action is very, very similar. But is this looking like what happened to gold? When they took out the highs, then we just saw it drop. We got this big doji. Now this is a candle. Now the doji candle is different to. I don't know what you call that big rejection because in all it's different in all sort of price action textbooks. Let's just call it the hammer. Well, it's not quite a hammer because the hammer's got a smaller body. So let's just get Bitcoin up again. This candle here, this is a lot more bullish. We haven't got that big move to the downside, guys. So this wick is not as significant as what we're seeing with Ether here. With this doji pattern here, that's pure confusion. It doesn't know what's going on. And for this level at all-time highs, to break through, to come back down, it's a little bit worrying. So I think Ether is a similar situation as Bitcoin here, guys. We're in a bit of confusion. Or if you look at on the weekly here, guys, we've just seen just a ridiculous pullback. And look, it's been eaten up instantly. This looks more like the Bitcoin on the other side. This weekly chart here looks more like the Bitcoin candle here that we're looking at on the monthly. Are the buyers just getting bought? I mean, it's looking like I'd like a nice clean break across here because we're still in no man's land. But look, the buyers got bought up instantly. So we're in a bit of confusion stage here right now in the markets, guys. Bit of confusion stage. I'm not personally taking anything. I've taken the majority out of my Ethereum whole holdings anyway. When we got to the all-time highs, I thought we were going to get a big rejection here, which we did get. I was a little bit incorrect on that because we did go higher, but it's no issue whatsoever. We can always enter in when I feel a bit more confident into the markets. But right now, and also there's a lot of Ethereum killers out there. We've got Cardone, we've got Dot, and they're doing really, really well. And Ethereum's got a lot of problems with the gas fees and all that side of things. So fundamentals for Ether aren't looking too amazing as well. That's what I'm going to talk about on this weekly rundown with the crypto side. Let's get back into the real stuff, guys. Into the real stuff. Let's get into the FX space now. Now. We can see sort of dollar making this edgy move out here. That was the monthly close. This is obviously the monthly open. I'm not going to class too much on that. So we have not managed to break this level. We have not managed to break below. Price actually looking very similar to what we saw here back in the 1st of Jan. Looking very, very, very similar. Can we get a big move back up here? Obviously, my views, guys. I'm looking for the first target I'm looking for is a 92. I'm not going to go on to too much on the bigger time frames because I'll talk about this week out. But this is what I'm seeing. You'll know what I'm seeing. But let's get into the smaller time frames. So we are getting a very nice rejection here. Do you know what I do rate actually? Do you know what I do rate? Sorry, let me move that. I did that in earlier. But obviously, we had this move here, which we predicted on the last breakdown. It's hit there really, really nicely. I'm happy with that. Price actually looking good, but guys, we're still ranging. We still need to see a break. I'm expecting this candle to reject, maybe tomorrow's to reject, and then maybe some bullish behavior after that. I would like this weekly candle to close and hit our 92. I can see it happening. I can see it happening. But guys, don't forget, we're still in a range. We are still in a range. So let's not get too hasty. We are still ranging. So not much to talk about here. We had a good week last week. Great weeks, especially on that Thursday with the big bull run with the uncertainty from many things, from the ECB talking about they had the verbal intervention, which I've been talking about this for weeks. I'm very happy they spoke about this. I'll talk about this more on the EU chart. But yeah, we had the verbal intervention and we had obviously the wobbly move from the bond yields, which made investors a little bit worried. As you know, don't forget the dollar move is risk off. It's risk off and US growth, which is a bit confusing. But yes, this is what I can see here, guys. Nothing really to talk about here. I don't expect this level to be broke right now, but to be coming back down here. Maybe broke towards the end of the week, but not right now. Maybe even next week, guys. Maybe even next week. But dollar's a bit delicate. We've got investors talking about inflation, but I personally think deflation before inflation, because the inflation is being used with the money supply velocity, guys. As I spoke about a few times, I don't see, because everyone talk about inflation. Yes, we've got asset inflation, but we haven't yet to see the dollar. I mean, yes, we have seen dollar inflation, but I don't think we're going to get this huge. I can see this eventually, but right now, I think we're going to see deflation, guys. That's what I think with that we're going to see. Don't forget, guys, if we do get this stock market crash, which we've been talking about, money's going to go straight back into the dollar because it's a safe haven. So let's not all jump on the whole bandwagon of this. Oh, the dollar's going to die. Let's all jump on the bandwagon here, guys. We haven't seen death yet. I've seen no death. I could even see a little pattern like this, maybe. Back along here, then to go up there. But yeah, guys, I wouldn't even say I'm selling the rally. Sorry, I'm buying the dip, yes, but not aggressively buying the dip. Because guys, we could still see another move come down here. There's no issue. We could even see this level getting breached and then going back up. Or I could be wrong, and the level could break this level and come further down. Don't forget, we can still reach these sort of levels here, guys. Don't ever think we can't. But I don't personally think that it will get that deep. This is what I'm seeing. I'm abiding by what I can see, not what I think, what I can see. And this is what I'm seeing here, guys. That nice bullish move here, where we grabbed liquidity from down here, that was a fantastic move. Really, really big move. And now we touch the highs, the rejected highs, it's no problem. Now we're into the mean of our range. This is sort of the mean to the medium around here, into the range. For to reject the thing and come back up here. That's what I can see in the long and short of things, guys. Now let's get on to EU, baby. Love the price action of EU, actually, really nice. As I pointed out last week as well, we've got the big rejection there, which is a lovely call. We've got the TP. We've got a bit lucky on TP, though, I must say, because I removed the SL from here. I did remove it, which is a little bit naughty. But I just knew I don't normally do that, but I knew that we were going to get some headwinds because we had the ECB meeting, we had the Fed meeting as well. We had loads of intraday stuff going on. I knew we were going to get some crazy swings, so I just thought let's move it and hit TP today. So that's not worry about. Anyway, let's talk. So as soon as the ECB spoke about that verbal intervention, we saw price absolutely plummet. Now we need and basically the ECB, what the ECB first spoke about is they said the yields are too high. And as I spoke about with the yields, obviously with the debt market, the yields is the strength, guys. Yield is a strength and the return. So when yields are too high, they'll be buying more bonds. Bonds drop down the yields. So with that in mind, EU drops. Makes perfect sense. And I've spoken about this a few times anyway, previously about the ECB having the intervention. They've spoken about it a few times, but this time the bonds reacted nicely and Euro USD reacted really nicely as well. So there's a good bit of price action there. But let's look at the bigger picture. We're still I'm not a big trend line fan, but there is significance in there. We haven't broke this level here. We haven't done too much. We're rejecting. I still think we can get a level back up to this kind of region here, because the EU is kind of similar to what the dollar is. They're not letting anything slide too much yet. Even though I'm bearish, euro and dollar have got a very close opposite correlation, guys. So it's difficult here. It's difficult to say because I've seen this was the big move here, and I've caught that. I anticipate some further downside, yes, but are we going to even get this? The only rejection that we're going to see. We've now caught the bottom of this fairly significant level here. Are we just going to see this here and roll over? I don't really know. All I know is I'm bearish on Euro USD. I've caught my pips, and if price comes back up to here, price does come back up to here. Oh my God. Anyway, guys, I'm not doing this. It's getting ridiculous. If price comes back up to this region here, I'll be happy for a discounted price, but price action will look very, very ugly. And to me, it will look more like an inverse head and shoulders. So price action doesn't look amazing in a minute, but I like this liquidity grab. I really like this. And that's why I look for the markets. I look for these liquidity grabs. So to me, we should be coming down from here. But we'll get some ugly intraday price action because, as you know, there's a lot going on with the euro and the dollar as well, guys. And we're in this indecision stage, what's going on in the world as well. And what's going on with all risk will implement in Euro USD as well, guys. So at the minute, I don't know. that's my honest opinion. I don't know. I'm bearish, yes, but this candle I don't really like too much. But I mean, if we're gonna follow suit in the DXY, the price can come back up to this region here. Price can come to this region. It can come here and reject, and that'd be healthy. But I don't like the price action. It's a bit messy. And reject of these trend lines, not breaking these lows, it's looking a bit messy. Now I would have thought we'd be a little bit further down by now. But it's not to worry. It's not to worry. So that's my views on the main two, the DXY and the Euro USD. I'm not really too sure. They're both still stuck in the range, to be honest. We caught the move here, which is good. They're still stuck in the range. My outlook is still a weak euro and a strong dollar, but let's just see. We're gonna get some ugly price action. Let's look at pound. Pound's looking good. So we're creating some sort of floor here, which is looking good. Happy we finally got some rejection, as I was talking about for ages. But another thing I want to say as well, these monthly closures on all G10 FX is something to think about. It's something to think about. I know we've seen that I know it looks like we create some sort of floor here. Don't be fooled. Don't be fooled. That knee-jerk move on Thursday showed a lot, and the indecision in the markets on Thursday showed a lot as well. This week, I'm more of a spectator. The monthly close has worried me. I wouldn't mind entering a small lot long here just because we're at the discounted price, but I can see risk coming down. But for the sake of a nice discounted pound, I wouldn't mind seeing this going all the way up to our next high, which is this sort of level here. But we can come down. If we hit SL now, I don't really mind. It's not really too much of an issue, to be completely honest. But as you know, I'm very bullish pound, the best G10 currency out there with growth, vaccinations, which is obviously a big thing. And it's not got too much inflation, pound. Not too much compared to the rest. Not too much. So I'm very, very bullish pound. Very, very bullish. So let's look at potentials here. Let's just look at potentials. Get rejection here. We could even, we've seen dirty rejection here. Don't forget on this rejection, look how this it's a very big area of interest. So really, guys, we can see price come down here. I'm looking at the price. I'm not looking at fundamentals. Fundamentals, we should be higher. I'm looking at the price. Look at the price. We've got the big monthly rejection here. We can ease off and come back down here. That won't be an issue. And if we get here, look at that, 133. It's a beautiful discount. Beautiful discount. I'm actually praying that happens, to be honest. And obviously that correlates with how I'm feeling about the dollar and how I'm feeling about how wobbly risk is at the minute. So this does make sense, but I could be wrong about risk. I've been wrong about risk a few times. That's why I'm giving a few scenarios. And at least with this one here, I don't really mind hitting an SL here because the risk to reward is still quite fantastic. I know we're at the highs, but the risk to reward and pound here is still fantastic as I'm that. So that's what I'm seeing. That is what I'm seeing, guys. I'm seeing it at the minute. If we do break below here, guys, we've got a very high chance of coming back down to testing the 133 level. If this level here, the 133 level gets broken, this is a fairly substantial area. This level gets broken, we're coming down to 133. Definitely. That's my views on GU. Views will be very similar for GJ as well. See, favorite GJ looks a lot healthier. Probably the safer trade is probably going to go with the GJ. It looks a lot safer. It looks a lot. The bullish just taking out all the lows here. It looks really nice as well. Really nice. But it's the same aspect. Same aspect. I mean, if we do get the wobbly risk, we can see price come down here. That's our next level here is 1 for 1. So a big drop, but we didn't get as much of a rejection here as we did with GU. So not as confident with the dip down. But guys, I don't like. I want to dip down to get a better price, but I'm still bullish pound. Still bullish. NZD now. NZD. It's getting a bit worried at one point here. NZD was nowhere to be seen. It was just flying, and I want to get price back down here. That's what I want. But a lot of people are asking why NZD is so strong, and the only conclusion I could think of, because NZD were actually coming across negative rates at one point. I mean, they're a slight China proxy, but not really. They've got nothing really going for them commodity wise. Their economy, nothing special. And there's also why it's been so strong. The only two reasons I can think of is, one of the reasons is where they palmed off the negative rates, where they said no, that could be seen as a very strong indicator. And secondly, I think where Nzd is risk, but it's the least risky risk for G10. It sounds weird, but that's another reason why I could think Nzd being this strong in the upcoming runs, because it's the least risk of the risk assets, if that makes sense. So as investors might see it as, I'm not too keen on risk, but I'm going to go for Nzd because it's the least risky risk. Does that make sense? Because where it's not China proxy like Ord relies on China, and where CAD relies on the USD, and it's obviously relies on oil as well. Nzd's not got much going for it. So I can see investing my thing for it as the least risky risk asset. Same reason why. But here, that rejection of the monthly is beautiful, isn't it? Really, 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 really nice. So I can personally see price coming down after this. Really big level of significance, really big level here. And well, if we do get a positive dollar now, which I'm seeing after all these rejections, I can see another reason why people will be buying into the dollar again. It looks like these risk G10 currencies all want to fall. But same view as pound, really. It needs to break this level here. This is a very, very big level. We consolidated here for weeks, well, a couple of months. So this level needs to be broken to get these to access these levels here. And if we get to these levels here, guys, woo, baby, we're going. So it's the same look as pound, same view. Let's look at Ord as well. It's probably the same. Same view. These levels need to get broken. See, if Ord looks a lot more bullish. Ord looks like it's well, obviously the thing about the Ord correlates with the S&P 500 very, 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 very well, and obviously with Bitcoin and all of these. So this is still risk, and there's a bit more to it with the risk. So I spoke about at the beginning of the video. So I'm not going to talk too much about Ord. Not really too sure on Ord. I'll be a bit more keen on Nzd dropping. So I'm not really too sure on Ord, but if risk is back on and we did just see a dip, then Ord's going to keep flying. Ord's going to keep going. But I want to get this wobble out of the way and know exactly where I stand. I wouldn't mind taking a break. I don't trade breakouts, but how I'm unsure on risk, I wouldn't mind taking a breakout trade on all Bitcoin, S&P, and I don't trade bonds. I just look at bonds, so I wouldn't really trade a breakout bonds. But I mean, even with Ord here, we're approaching very key levels. It's a lot to take in. We're all approaching some very key levels, and sometimes the market is better to sit with your hands. Well, it's better to sit on your hands rather than just to place some fluky bets. Obviously, that GBP we talked about earlier, that's a good risk to reward. If it hits SL, it doesn't matter. We risk 1%, it doesn't matter. But we're approaching key levels here, guys. That's what I want to drill into here. We're approaching key levels, so just trade with caution. But let's look at emerging markets as well. Where are we? Where's the emerging market index? Ooh. See, risk is looking sticky. And the thing is, what you must remember is, guys, when dollar is strong as well, emerging markets can hit the absolute hardest. Because dollar denominated debts just get higher. They just get higher and higher. And these countries that are struggling to actually repay back their debts already, they're going to get stung even harder. So when dollar does go up and we see some risk off, you want to start piling, you want to start selling all these emerging markets because they're going to get hit the hardest, guys. And to me, this is looking sticky. And don't forget, let me say as well, emerging markets was the first to move when we had the market crash. So maybe this will give us a better indicator, guys. Maybe this will give us the indicator we need to going forward into the stock market. Because if I look at this, guys, this looks like it wants to roll over. But obviously, we've got to look in the smaller time frames, guys. We can't look on the big ones. The big ones give us the big picture. Yes, we've got to look further into it. Pretty substantial areas here that we need to be broke. But yeah, guys, this is looking a bit sticky. This is looking a bit mad. It's looking a bit nutty. Oh, let me stick on charge. Sorry, guys, give me 2 seconds. Give me 2 seconds. I mean, guys, it's clear to see, guys. Sorry, before I say this is the index. This is the emerging market index of all the main ones, which would be ZAR, Mexican peso, Russian ruble, Turkish lira, all of that, all of that, all of that. So this is looking this. So guys, so guys, to me, this looks like, when I look at the monthly, just solely the monthly, it looks like it wants to roll over. But we need to look. We need to look a lot further into. Can't go words out today. Look a lot more further into that today. So this is the level which I'd like to see broken. Basically, it's the one. It's the 1400 level. That is the key level, the psychological level, and the level of interest. So I'm a lot more bearish on this than some of the other risks, but we still need to be broken. I don't want to jump the gun here. Can't look at a monthly in trades. I'm an intraday guy as well. So, but it's looking worrying. Let's put it that way. So from there, let's look at some ZARs and some Mexican pesos. Same story. If we can't break here, guys, we've got a lot of upside to go. And look, let's look at it. It's so ZAR is probably the leading emerging market, probably the most traded emerging market pair. So, I mean, we're only in uptrends, guys, and we're now entering a very big level of interest. Guys, I'm not going to lie. I think it's safe to say that we are definitely in a sticky situation. I'm more with the whole risk. I'm more inclined to talk about the emerging markets dropping than the stock market dropping. But this is looking sticky, guys. We're in a very pivotal point. To me, right now, the upside to this is looking more attractive to the downside. Yeah, and this is one of the biggest returns you're going to get in FX. So this is what the main FX risk is looking at, guys. So if this starts to go up, guys, I can easily see. The rest follow it. Don't forget. The main risk, which is the biggest returns, is EM, Bitcoin, debt market, and the stock market. And don't forget, this was the leading indicator going into the last crash, guys. The emerging market. So we saw a leak in here first. So we see a leak in here first again. We'll see history rewrite itself. Anyway, let's look at the daily. Let's take this out. We've seen some upside here. I can see a move coming back down before a move up though. So be confident to say. That's what I'm sort of looking at with the ZAR. I could see price coming back down here before excelling 100%. Don't forget, we're still in a bear market here, guys. So if we do get this move up here, that is an intraday reversal, which would be, as I keep saying, risk to the other side. So don't forget, this going up is negative risk, risk off. Look at Mexican peso before we're going to finish up on the oil market. Peso price actually looks really nice. That looks like it wants to come up a lot more than ZAR actually. Peso's looking good. Peso looks like it's already seen its move a bit further up to the upside compared to ZAR. Very interesting, guys. Very interesting. Sorry about that noise. It's my bloody bot running on my MT4 on my laptop. It's very annoying. But similar story, but a little bit better here. Yeah, I'm bullish on that. Definitely. Rejected the lows here. Crossing the lows of the day for now. Very interesting. Very interesting, guys. Oil. Very strong Monday candle previously. Risk is nowhere to be seen. Well, risk looks strong here. Weekly looks like slowing down steam. The daily looks like we could roll over, but we still need to break these lows. This here looks like more of a dip buy. Well, they're all looking the same. Everything looks like it wants to roll. Everything looks like it's on the brink of either rolling over or being bullish. But the difference is, when it's bullish now, it should be bullish here for a decent period of time. It's the pivotal point here, guys. Long term, I can see oil. Oil's a sticky one though, because where is a commodity? Commodity assets are so inflated. I could see oil coming back up here where assets are so inflated, but it's risk as well. And yeah, so I don't think we're at the top of this range here. But then have we broke these? Have we broke this range? I wouldn't quite say so, guys. All risk is looking sticky. I've got nothing more to say to it. I've got nothing more to say to it. All risk is looking sticky, guys. I hope this video has helped. If you want any more information, please feel free to message me. Or if you're not in the group, guys, join the group. It's free. Join the group. Let's get involved. Let's get stuck in. Let's make some money, guys. Let's do this.